We're live, baby. We're live against all odds, against the most insane technological uprising that I've had to face these past 2 days. We are live. And I'm happy to be here. Welcome to the Premarket Prep session on this fine Friday Eve, February 8th, 2024. As I said, I've gotten just a full-on tech rebellion these past 2 days. I woke up extra early, had the stream set up at 6:30, and then I come in here 6:30, no 7:30. 7:30 had the stream set up, and I come back ready to go live, and it's like, oh, stream has failed, must try again. Bro, you've been set up for an hour. Like, what are you doing? But anyways, we tried again. We got a little camera issue, but got that resolved, and now we're here and we're pushing forward, just like the market is pushing forward, and just like our accounts are pushing forward. So I'm excited to get into what we have to go on today. Once again, we are waking up to more money. It doesn't get old. It does not get old. I don't get tired of it. Like, it's something that will never be lost on me and that I will be eternally grateful for. The ability to look at a computer and click some buttons, place some money, and then come back and have more money is absolutely amazing. It's absolutely amazing. And I'll never get over it. I'll never get tired of it. And I'm excited that I get to do it with you guys each and every day because, again, it's not about the money. It's about the purpose, right? Having the ability to do what you want and what brings you fulfillment and what gets you up in the morning, right? Having the freedom to do that is what this is all about because, again, it's about making the most of the one life that we have. That's what we want to do here. And, having a job does not stop you. Having kids does not stop you. Having a demanding job does not stop you. This is a skill that literally every single person should know how to do. Every single person, because it is just unlocking the true power of your money, the true multiplication power of your money cannot be underscored enough. Like, this is especially what you want to do if you have a job, right? Because the retirement system wasn't set up to be one of longevity, right? It wasn't one that was to handle the weight that we put on it, and the baby boomers are shut, right? I don't want to be working till I'm 70. Nobody should. The way that you do that is you unlock the purchasing power of your dollar and you use it, right, to multiply your money. Because back in the day, right, if your parents, it was some crazy statistic. It was like if your parents made $100,000, you now have to make like $330,000 to get the purchasing power of what $100,000 did back in the day. You have to make three times what they were making, right? And that's just not a lot of people nowadays. Not a lot of people can say, oh, I make over 200, 300K. And in order to do that, you can make 100K from your job and make 100K elsewhere, right? You can make 100K from your job and make 3, 4, 500K elsewhere. But it's important to recognize that your job ain't the be all end all, and that you got to put your foot forward in order to learn the skills that will pay you outside of that stream. So I'm excited on this stream so that we can talk about exactly that. So our top news here, the S&P 5000. Another Wall Street milestone is within grasp as the S&P 500 continues to charge higher, powered by a robust earnings season. Corporate profits and upbeat guidance are showing healthy spending patterns among consumers and businesses alike, while AI momentum appears to justify the massive valuations seen in the tech sector. Coming up, the S&P benchmark, the benchmark S&P 500 index is a whisker away from the 5,000 milestone after closing at 4,995 on Wednesday and climbing as high as 4,999.89 during the session. Bigger picture, despite Fed Chair Jay Powell ruling out a rate cut in March, it's clearly the end of a rate hiking cycle unless some incoming economic data throws a curveball at the central bank. Traders continue to celebrate that in style, especially if holding off on policy easing guarantees a significantly softer landing for the U.S. economy. The latest figures have also continued to boost sentiment, with the GDP growth expanding at a 3.2% clip in Q4 and another 353,000 jobs added in January. Now, that highlights the strength of just the overall macro here. Quote, the question for bulls is whether this market continues to be propelled upward by a handful of mega cap tech names or the rally broadens and the average stock leads us higher while the Magnificent Seven tread water from here, notes Lawrence Fuller, investing group leader of the Portfolio Architect. Quote, there should be plenty of opportunities between now and March to position for the next leg up in this bull market. I could not agree with the statement more. Like, There are so many opportunities right now that are layup opportunities for you to get in and make a crap ton of returns in this market, but you have to take the time to do it, right? You don't want to sit there and say, once again, right, I saw this thing happen. I was warned about it, but because of my own fear, my own anxiety, my own limiting beliefs, um, my own resentment, right? All of that, I missed out. Don't do that because again, there's always opportunity in the market, but there are these rare points where you get absolute layup opportunities, like just the easiest of easy. It's like when you wake up and you want a craving, you're like, oh, I want some tater tots. And then you walk by and there's like a tater tot pop up. It's like, what are the odds of that? Like, yes, you can go get tater tots with DoorDash in the grocery store, whatever you want to do, you can get them. But it's a rare opportunity where you walk inside and boom, everything you could want is right there. And that's where with markets, especially this year with these interest rates going down. Just don't be that person that sits back and says, "Oh, cool." Or maybe your overall portfolio just does well and you're like, "Oh, that's enough for me." Is it? Right? Because again, we need 300K to have the purchasing power of 100K. So is your portfolio, which you're not going to touch for using anytime soon, is that actually enough for you? Just that going up actually enough for you? I'd wager to probably say not, right? If it is, then you're in the top high percentage of Americans because for most it ain't, right? And that's what we want to make sure that we're focusing on is taking advantage of every opportunity possible, especially when so many are being taken away because big tech has already laid off tens of thousands of people this year. It's 2024. We are 8 days in and we have 10,000 of people that have lost jobs in big tech. And again, what that does is it makes it tougher for everyone else because suddenly you've been at your job for 5 years, you do a good job, but so and so who was an executive at Google was now laid off and they're looking for a job, right? And if I'm the company, you're like, wow, this person went to Harvard and worked at Google for 10 years, right? So you gotta make sure that your money's working extra hard because between AI, people who use AI, and then people who have been displaced by AI that have impressive resumes, tough job market out here. By the numbers, only a month into the new year, the S&P 500 is up 4.7%, which is more than halfway towards the 9% average annual return seen over the past 2 decades. Some FOMO may also be taking place among investors who missed out on the big rally last year when the benchmark index soared more than 24%. Top heaviness could be a concern given the fact that the five largest stocks, Alphabet, Amazon, Apple, Microsoft, and Nvidia, account for 27% of the S&P 500. But that has been going on for some time and hasn't stopped the index from hitting the 3,000 level in 2019 and 4,000 only 2 years later. Now, moving on to the big headline news of this morning, the news that is absolutely going to be beautiful for the bottom line and for our pockets here. Disney, Magic returns. Disney gained 6.7% after hours to $105, almost $106 per share on Wednesday after posting earnings that landed on the high side of expectations and offered upbeat guidance as ongoing cost cuts pay off. Meanwhile, Disney Plus core subscribers shrank by 1.3 million sequentially, an unsurprising result given the price hikes on the service. Besides headlines surrounding Fortnite maker Epic Games and Taylor Swift, CEO Bob Iger said the renewed strength of all businesses, from sports and entertainment to experiences, sets the stage to boost shareholder returns. The media giant also raised its semi-annual dividend by 50% and announced it would start buying back shares for the first time since fiscal 2018. So yeah, Disney announced a big investment into Epic Games and basically is bringing their characters to Epic Games slate. Disney are bringing their characters to Fortnite. So they're just making moves, right? And this is what Disney needed to do, and they're doing it. And that's exactly why, I called this breakout on Disney at the end of last year because we were in this huge bullish pattern that took years to develop, years of accumulation. We finally start to break out. And we've been on Disney now for probably 4 months, right? 3, 4 months. And now is when it's starting to gain headlines. But when you want to get in is a completely different story. Same thing. Now is when you want to be positioning for the things that they're going to be talking about nonstop in June, right? They're like, oh, this sector is up, blah, blah, blah percent, and these companies have recovered this much. And yeah, this is the time when you position for that stuff. So yeah, pat on the back, right? all around, the crystal ball is hitting. Disney came through. Disney will continue coming through here with this beautiful climb, as we had the weekly bull flag that fired 2 weeks ago, and we had this huge falling wedge on the monthly that fired a few months ago. So Disney continuing to make its move up and continuing to pay us as a part of the Stock Options Made Easy community. If you're not a part of it, email me, adam@adamhollandeducates.com, DM me, at Adam Holland Educates on Instagram. Let's figure it out, right? Let's figure it out. But we meet, right? Because it's not just anybody moseys on in here, which is something that I take a lot of pride in. Now I meet with each and every person that wants to learn, wants to be a part of this community, because you have to be intentional about the people that you open yourself up to and open your community up to. So I am very intentional about that. But if you want to make positive change in your life, this is somewhere where we're focused on that exact same thing. In terms of bonds news, Treasury time signaling strong investor demand despite the auction's large size. The U.S. government on Wednesday sold a record $42 billion of 10-year notes at lower than expected yields than the past 6 auctions. The Treasury's quarterly debt refunding will be completed later today with the auction of $25 billion of 30-year bonds, which analysts believe is the bigger test as it's longer in interest rate risk. Seeking Alpha analyst Crystal Allen feels bond investors will be motivated to take advantage of the current higher rates. Quote, if Wall Street is convinced that rates will soon go down. Yeah, I had the wrong cadence on that, but the distance range true. In terms of trade news, made in Mexico amid diversification efforts and growing trade tensions, Mexico overtook China to be the top source of goods imported by the U.S. in 2023 for the first time in more than 2 decades. Imports from Mexico increased 20.8 billion year over year to 475.6 billion last year, while Chinese imports decreased 109.1 billion to 427.2 billion, according to the U.S. Census Bureau. Economists said the data is a clear indication of the impact of escalating trade disputes between Washington and Beijing. Quote, we're decoupling, and that's weighing heavily on trade flows, said Mark Zondi, chief economist at Moody's Analytics. Yeah, it happens when you have, a deteriorating relationship and what looks like brewing war tensions. You tend to decouple, and a lot of, in terms of the economic stock side, like I talked about yesterday, and I've been talking about for the past 2 years, a lot of this manufacturing is moving to India, right? That's the next gold rush. But pretty crazy. Now we do more to Mexico than we do with China. In terms of today's markets, mixed bag here in Asia. Japan up 2.1%, Hong Kong down 1.3%, China up 1.3%, India down 1%. The FTSE in London down 0.1%, Paris up 0.5%, Frankfurt up 0.2%. The Dow down 0.1%, S&P down 0.2%, NASDAQ down 0.2%, crude oil up 1%, gold down 0.4%, Bitcoin up 4.3%. Bitcoin back moving again. Might be firing a little bull flag action. And if that is the case, let's see here. Drop a few nuggies live on the stream for the people. Yeah, definitely doing so on the hourly and on the daily as well. Looks like yesterday had a nice breakout, cup and handle as well, right, on Bitcoin. So you can look at Coin, look at Riot, look at all those things. Coin looking like, oh yeah, nice little double hammer, some hammer action. At this low, what is that, around 118, right? So taking a look at Coinbase here this morning, might be worth it. Coinbase, Riot, Mara, the normal crypto suspects. But Bitcoin definitely firing a nice little daily bullish pattern. So you can see those crypto tickers start to recover. They've taken a beating, but what did that also translate into? An opportunity, right? A nice opportunity if you can get a good entrance. So yeah, a number of them, Riot, Mara, Coin, something to take a look at. Doesn't mean, right, immediately at open we're hopping into any of them. You go, you survey the charts, right? You take inventory of the opportunity, and then you see if it's something that's worth executing on. But I'm not you don't let anything happening kind of force you into a fight or flight state. A lot of people are like, oh, this thing is going on, like, we got to go now, we got to do this. Like, that's how you make mistakes, right? You want to maintain a sense of calm throughout, throughout how you execute, whether things are up a lot or they're down a lot, or there's a lot of opportunity, there's not a lot of opportunity, because when you get, really, really worked up is when you make mistakes. In terms of today's economic calendar, At 8:30 a.m., we got initial jobless claims. Did that do anything? Let's see. Not looking like it. I mean, if anything, we started pushing a little bit. So yeah, initial jobless claims not super important here this morning. Any data during the day, wholesale inventories, whatever that is, we get that at 10 a.m. That could be one of those like minor movers that we get right after market open. What else is happening? ARM Holdings, ticker ARM, surges after raising full year profit guidance. ARM was the semiconductor company that was about to get acquired by Nvidia, but of course, regulatory bodies that are struck that down. But they're in the semiconductor space. So to be honest, everything in the semiconductor space is red hot right now. Doesn't mean that it will hit on earnings. As you can see, AMD didn't hit on earnings. I believe Nvidia reports soon, and there will probably be tons of people involved, in trading that. Let's see when they report. They report actually on the 21st of February, so still some time there for Nvidia. But yeah, PayPal slides as active accounts slip. Outlook disappoints. NYCB, ticker NYCB, and talks to shed residential mortgage risk, sell RV loans. China's top securities regulator replaced amid stock market rout. More China worries. Retail inflation drops to more than 14-year low. China's going to have to make moves sometime soon. So timestamp this. What is it? Thursday, February 8th. China's going to have to do something, right? They've been mulling over some type of package or something to keep essentially their nation afloat, keep their markets afloat. So they're going to do something over the course of the next few weeks, which we have a little speculative trade that was announced 2 days ago on that front. China's top securities regulator replaced. Amid stock market rout, we went over that. Uber tops gross booking estimates amid record engagement. Cost cuts. Some Tesla employees may be on the firing line. Tesla, something else that showed some sparks yesterday and actually paid us really nicely intraday after we broke that hourly downtrend on Tesla and got a perfect entrance on some calls. CVS Health, ticker CVS, in charts. Q4 revenue rises across all segments. Then AMD continues to make CPU market share or take CPU market share from Intel. Then Bill Ackman's Pershing Square files to launch new closed-end fund. So, beautiful people, today on Thursday, February 8th, 9:06 a.m. Going to go take some profit on some Disney shorter term swings and look at the amazing repercussions of proactive action on these long term swings, which has been beautiful, right? Long term account looking great, market about to cross 5,000 in terms of the S&P, and it's an amazing time to be putting your money to work for you. So make sure that you're doing exactly that. Other than that, people, have a great rest of the day. I'll see you back here tomorrow morning for our next pre-market prep session. I repeat, if you want to go to sleep and wake up and be able to secure the bag just like we're doing mostly every other day here, in my line. Let's get to work. All right. Have a good one. Peace.